Good afternoon, everybody. I'd like to welcome you all to the Halftime Talk feature interview series. I'm delighted this week to be joined by Patricia Schouker, founder and CEO of Energy Bridge Global, based in Washington, D.C. Patricia wears many other hats, but we won't list those right now. But great to have you, Patricia, on the program today. Thanks for joining us.
Oh, thanks for having me.
Well, a lot to talk about today. I mean, all things geopolitics and energy. We'll try and get through as much as we can in the 20 minutes or so. Let's start with, a couple of headlines. Again, no shortage of headlines these days coming out of the US particularly, but of course, having global ramifications. Let's talk a bit about the Canada and Mexico tariffs, because, of course, a month ago or so, the Trump administration said what it intended to do. It postponed the implementation on these sort of 25% tariffs, but indications again very quickly that those might not be fully imposed come tomorrow, for example, when the official date for them to start is. I mean, on the energy front, really, that is pretty critical, isn't it? And many analysts in the last month have said that no way will the US really pursue that level of tariff on energy imports, particularly from Canada. It's just far too harmful for the US economy. What's your take on what might happen and what would be the consequences of such scenarios?
That's a great question. And obviously, March 4th is tomorrow. Like you
Yeah.
said earlier, there's no shortage of headline. And so President Trump is set to impose sweeping tariffs on imports from Canada and Mexico. So that's 25% on most goods, 10% on energy products from Canada. So now, if you're just hearing about this, you may be wondering, wait a minute, aren't Canada and Mexico our closest energy partners? And you're absolutely right. And for the past few decades, we've got NAFTA and a USMCA really creating a highly integrated North American energy market, and energy has been one of the key drivers of these regional partnerships. And as you know, Canada supply 60% of U.S. crude oil import. That's 4 million barrels per day. They also send us nearly all of our natural gas import, meeting 9% of our total consumption. So on top of that, Canada and the US share this integrated electric grid, which helps keep power prices lower and more stable. And of course, Mexico play a crucial role in supplying the Gulf Coast refineries. So being a top customer for refined petroleum products. So definitely there's going to be some immediate energy market disruptions. The moment this tariff goes into effect, we're looking at higher energy prices for US consumers. We've seen a lot of experts already predicting that gasoline prices in New England and the Midwest could rise by 15 to 30 cents per gallon within just a few weeks, which is huge, especially if you're standing on the consumer side of things. And that's because the US refining system was built to handle heavy crude from Canada and Mexico. So you can't just flip a switch and start refining the lighter US crude without expensive modification. So you really have to keep that in mind. But also on the retaliation aspect, right? Speaking about the what's next and the risk at what's at stake, Canada is obviously not taking this lightly. From colleagues of mine that I spoke with that are based in Canada and other companies, they've signaled that cutting off energy supply is on the table if tariffs goes into effect. And I strongly doubt that they'll go nuclear on this immediately, but it's not an empty threat, right? From a country like Canada, we've already seen Canada looking for new buyers in Europe and Asia. And if they start redirecting oil flows elsewhere, I think US refiners will be in trouble. And let's not forget that the Midwest relies on Canada for 70% of its crude oil supply. So there's no quick alternatives here. And so there will be some.
Yeah, and I mean, as you said, sorry to interrupt you, Canada has already sort of not preempted, but I mean, when the talk first came out, the Prime Minister of Canada, immediately said what they would do if such tariffs are indeed applied at the end of the day, whether it's the energy tariffs or otherwise. And Canada does certainly hold some cards. But okay, well, I mean that's the Canada-Mexico angle, and we wait to see what will be implemented. Let's stick to the US sort of tariff story and just talk a bit about China, Patricia, because I would like to address, the fact that Trump has just slammed another 10% of tariffs on Chinese goods. Again, I mean, China has also retaliated with mild, what people would call mild measures. Again, what impact do you think that could have on those bilateral relations going forward? I mean, is this just a sort of mild tit for tat while each side figures out what it really wants to do? Where do you see this going in the next month or two?
Yeah, definitely. So I think the impact on China would be, I would look at it on the critical mineral side of things, right? We've seen a lot of those conversations going on with Russia, with Ukraine. So I think definitely China and the Middle East has a big place here. China obviously currently dominates the global rare earth supply chain, refining over 85% of the world's rare earth. But if the US, for instance, let's say as a scenario, secures Russian minerals, the EU decides to build out Ukrainian mining capacity and both cut China out of the processing loop. So obviously China's global mineral dominance starts to erode. So what does China do in response of that? One, I would see retaliation with export controls. China could definitely restrict export of processed rare earth to the US and the EU, which will force Western industries to either build their own refining capacity, which is also a long-term challenge, or depend on Middle Eastern and African source. The second thing is China could pivot even harder into Africa, especially Congo for their cobalt, or Namibia for uranium and lithium, and securing deeper partnership before Western investors move in. In the Middle East, China might increase rare earth and battery investment deals with Saudi Arabia and the UAE, securing a new alternative supply chain outside Western influence, but also the leverage over Russia, right? If Russia starts supplying the US with minerals, China could retaliate economically, demanding, for instance, better energy discount or slowing down industrial investment in Russia.
Okay, well, that's, I mean, these connections are getting more fascinating by the minute, aren't they? The other connection
They are.
that you just kind of mentioned, which is part of that, is China and Russia in terms of China taking Russian oil. And that's, of course, during the sanctions of the last 2-3 years on Russian oil, that has been a big swing, I suppose, in trade flows to an extent. Russia's diverted its oil to Iran, to China. And at the same time, you have this battle possibly going on, strategically speaking, between China and the US, using their partners, if you like, on the rare earth supply chain front. So a lot of moving goalposts. But let's talk a bit about that Russian oil as well, in the context of what we've just seen, happening, the conversations between the US and Ukraine and Russia on the ceasefire,
Mhm.
Europe now getting involved. Um, you know, there's general agreement that the sanctions on Russian oil haven't stopped that oil flowing, but those
Mhm.
have moved around, haven't they? We've had more stringent shipping sanctions by the US as well in the new year. Where do you see that going if we do get a ceasefire of sorts and an easing of sanctions on Russia? What difference will it make to trade flows, oil flows?
Yeah, look, I mean, if Trump's were to engage with Russia again, I think it would certainly be transactional, not strategic. I think the days of attempting a grand détente, as he tried in 2017, are long gone. I think both Democrats and Republicans now view Russia as a hostile actor, particularly in light of the war in Ukraine. But that doesn't mean Washington and Moscow won't find areas of quiet cooperation, particularly when it comes to energy. And if you look at Russia right now, its ability to sell oil is constrained by Western imposed price caps and sanction. But if Trump's were to ease secondary sanction, then it could lead to more Russian crude flowing into the global market, which will lower oil price. But that sounds great for American consumers. But there's a catch, right? It could stir conflict within OPEC Plus, especially between Saudi Arabia and Russia. And the reason why is because the Saudis have been cutting production to keep prices stable, while Russia has been undercutting that strategy by selling oil at a discount. And if the US loosens restriction, it could really lead to a price war between Riyadh and Moscow, potentially unraveling OPEC plus unity, which I could definitely see on Trump enjoying this from DC. But I think if you look back also at historical parallel, if you think back at the 80s, again, keeping in mind that Trump is a big, Reaganist, the Reagan administration encouraged Saudi Arabia at the time to flood the market with cheap oil, which helped cripple the Soviet Union's economy, which was a major factor in its eventual collapse. But could Trump use energy policy to weaken Russia now? Maybe, but in this case, the more likely outcome is just market chaos. Right at the end of the day, not a strategic win
Absolutely.
for the U.S.
Yeah, and I mean, of course, OPEC Plus, you mentioned them, and in terms of the Russia context as well. I mean, what they have been doing is averting market chaos. I mean, OPEC Plus could wreak havoc on the market by releasing a lot of oil, couldn't they? That would damage them, but also damage stability in the market. And they have been, as you said, the likes of Saudi, have been taking the toll of holding back production for the time being. But it will be very interesting to see how that group dynamic evolves if indeed the Russia-Ukraine equation does move. Any thoughts about what OPEC Plus might need to do this week in terms of its decision making on April volumes? Of course, due to release some oil on the market, many people saying it should delay that.
Yeah, well, I mean, obviously there's a seismic shift, right, in this global energy. I think the U.S. is hitting 13.5 million barrels per day, fundamentally reshaping how the oil market operate. I think the key question is, what does Trump want to do with this energy surplus? That's the question I would ask, within the OPEC plus side of things, because under an energy dominance 2.0 doctrine, we're not just talking about U.S. self-sufficiency or U.S. energy dominance. We're talking about America as the defining force in global oil market. And I think if the U.S. is flooding markets with oil, OPEC Plus has to respond. Do they cut deeper? Do they cut deeper to proper price, or do they start competing with U.S. producers? I think this is a big problem for Saudi Arabia and Russia because they have different priorities. Obviously, Saudi Arabia wants high prices to sustain its economy and Vision 2030 reform, versus Russia, on the other hand, really need cash flow and might push to increase production, risking a price war. So I would really expect internal fractures within OPEC plus. But at the same time, there is a dilemma, which I call a double paradox, because if you take a bird eye length on the energy landscape, you've got Trump who wants lower gas prices for American consumers, but at the same time, you also need oil prices high enough for U.S. shale producers to stay profitable. So if oil drops below $65 per barrel, U.S. shale investment could slow down. But if price spike over $100, inflation becomes a political liability that Trump cannot afford. So he's really walking on the tightrope right now, and it will be very interesting to see on the OPEC side what's been said and what gets done.
Absolutely. And the shale, even the current price, which is above 70 still at the moment, is not being considered that favorable for shale producers. Very touch and go in terms of them sort of investing anymore, let's say, in pushing that number of 30.5 higher this year, and focusing on other strategies from a company point of view, all those private companies in the US. Yeah, I mean, so many moving goalposts and so many moving parts. Let's talk a bit, Patricia, about, you mentioned Russia. Just let's touch on sanctions on Iran, because of course that's another U.S. policy that has, from Trump, that has been the maximum pressure sort of economic sanctions, which he has already, now twice sort of announced since he took office, expected, I suppose. But the big question is, whether China will stop taking Iranian crude. Otherwise, whatever Trump does, really, that secondary source crude is going to continue to flow. People are saying that we might see, a disruption to Iranian exports, which have been ramping up quite a bit in the last 2-3 years under Biden. What would you say is the outlook for that? And if Iran does lose exports, again, impact on the market?
Yeah, definitely. It's a critical inflection point in U.S. Middle East relations. I think Trump's foreign policy in the region has never been about long-term strategic commitments. I think it's always been about the deal. So I think the real question isn't whether energy will override security, but how Trump will try to blend the two. And I think when it comes to on the Iranian side, it's always going to be the wild card. I think if Trump reduces U.S. security commitment in the Gulf, who benefits the most here? Iran, right? It's a weakened U.S. presence could really embolden Tehran to expand its influence in Iraq, Syria, Lebanon. It could increase the risk of Persian Gulf tensions, threatening oil flows through the Strait of Hormuz. We've seen that a lot, and that's where energy markets get really nervous, right? So if Iran sees an opportunity, we could see more tanker attacks, proxy wars, or even direct escalation. But if Iran believes Trump is serious about diplomacy, we could see a backdoor nuclear deal negotiation. And I think if Trump goes for maximum pressure, again, we'll expect a more volatile Middle East. But if he chooses pragmatism, then there's a chance for U.S.-Iran deal. So it's a really, really double-edged sword, if you want, because it's about how to hedge its bets. And obviously, Saudi Arabia is watching Trump closely. If Riyadh believes Trump is pulling back on regional security, I think they have two options, right? Double down on U.S. ties by demanding maybe a stronger security partnership in exchange for investment and oil deals, or deepen relations with China and Russia to diversify its strategic alliances. And we've already seen signs of that second option when China brokered the Saudi-Iran rapprochement in 2023. And Saudi Arabia has been expanding energy ties with Beijing. So really, if Trump withdraws or deprioritize Saudi security interests, expect Riyadh to accelerate its pivot to a multipolar strategy, because I think they would really want to balance the U.S., China, and Russia to really, at the end of the day, secure its future. If Trump scales back today, the question is who steps in, right? Will it be China? Will it be Russia? Will it be a coalition of Gulf states? So that's the long-term strategic question that everyone is pretty much asking right now. But also, when it comes to again Iran and the critical contradiction in U.S. foreign policy, I would say the U.S. wants to, on one hand, choke off Iran's oil revenue to curb its nuclear ambitions and regional influence, and on the other hand, China is Iran's lifeline, and enforcing sanctions risk escalating tensions with Beijing at a time where U.S. and China trade relations are already really fragile. So the U.S. truly enforce maximum pressure without triggering wider economic consequences. If you look at, if you go back on the U.S.-China trade equation, if the U.S. tries to crack down on Chinese buyers of Iranian oil, it could really trigger trade backlash from Beijing. Why? Because U.S. and China are already in a delicate economic standoff over tariff, technology restrictions, supply chain control. If Trump threatens those secondary sanctions on Chinese refiners or banks, China will retaliate, perhaps by restricting access to critical minerals, rare earth, or cutting export to U.S. allies. So would the U.S. really risk further economic turmoil to just stop Iranian oil sales? I think that China today is definitely hedging its bets. All the state-owned refiners have already started cutting back on Iranian crude to avoid direct U.S. penalties. They know the U.S. is watching. But Beijing, we know, is still quietly supporting those teapot refineries, the small refineries out there that as a way to keep Iran afloat without directly confronting Washington. So the U.S. can tighten the pressure, but it won't be able to fully cut off Iran unless China cooperates. Yeah.
No, and also the other part of cutting off Iran is that you get much higher oil prices. And of course, Trump has said he wants to keep those under control for domestic political purposes. So many things that could contradict each other. The other part of the China trade equation with the U.S., of course, is that, as is already happening, if China ultimately stops exporting goods to the U.S. much more than it is now, then clearly it'll earn less dollars, and it's going to start affecting that treasury holding, isn't it, of U.S. treasuries, which it's already starting to release. So again, the U.S. has a big debt problem, doesn't it? So that has to also be kept in balance. Patricia, before we let you go, let's just touch on Europe. We haven't talked too much in terms of Europe itself as a continent and its future energy security. Clearly, it has learned a few lessons in the last 3 years since the Russia-Ukraine war started, in terms of course reliance on Russian gas, and sort of reorganizing its its infrastructure to receive gas, for example, US LNG, and obviously turning a bit of investment towards that as well. Do you see that Europe could go back to taking more Russian gas if again we see a ceasefire with Ukraine? At the end of the day, if it makes sense economically, why wouldn't Europe do that? Look at Germany as an example, having a very hard time economically. Cheap energy choice was surely a very good thing.
Mm-hmm. Yeah, no, you're definitely touching a sweet spot of mine here when it comes to Europe and that topic. So obviously, if a peace deal emerged in Ukraine, I think Europe will face a very difficult choice. One will be uphold its energy independence goals or return to cheap Russian gas. And the US's push for energy diversification was reactionary rather than strategic. And now, with high energy costs straining economies, I think the temptation to revert to pre-war energy flows is growing. I mean, we've seen over the weekend. Germany is very much under economic pressure. I mean, Berlin's industrial sector is struggling under high energy costs. I mean, I think a quiet resumption of Russian gas import through not the Nord Stream route, but Turk Stream cannot be ruled out. I mean, we've seen Turkey being present in the meeting in the UK with Zelensky, which was interesting. Also, France is an interesting one, but I say that, France being very nuclear heavy, they may resist the pivot back to Russian gas. They would prefer to keep their strategic autonomy. But also, if Trump 2.0 deprioritize European energy security, well, then will Brussels double down on American LNG or seek detente with Moscow, right? But I think we have to be brutally honest. And I'm not, speaking on the European Commission side as I've worked there, but I would say it will be very interesting to ask yourself, like, if you were in Europe, would the European powers have supported Taiwan in the event of a full-scale military attack by China in the same way the US stepped in to provide a crucial aid to Ukraine after Russia's full-scale invasion? I think this is a fundamental test of Europe's strategic autonomy. And if the answer is no, then European leaders must acknowledge a really uncomfortable reality that they cannot afford to alienate both the US and China while still maintaining an uncompromising stance against Russia, right? I think the reality is really, really brutal. Obviously, I think in this year's geopolitical room, it's very emotional. Everyone is victim of their own emotion, especially in reading the room. And we've seen that with the meeting with Trump and Zelensky, but the EU is not truly independent in its decision making. It remains trapped between economic pressures, security dependencies, political fragmentation. Russia is not going anywhere. We know that. Neither is the temptation of its energy export. I think sanction fatigue will settle in. And the US may not always be the reliable security provider that Europe assumes, especially under this Trump 2.0. And China will use this moment of European indecision to really entrench its economic influence over the continent.
Patricia Schouker, founder and CEO of Energy Bridge Global. Thanks so much for joining us today on Halftime Talk. It's been great to have your thoughts.
Thanks for having me.